Happy Sunday, Tampa Bay. We're with you for another week to talk about the Tampa Bay real estate market here on the Duncan Duo Show, joined by Mike Corrigan with Cross Country Mortgage. And, going to lead out of the gate today to talk about refinancing your mortgage. You've likely seen on the news and heard solicitations, seen on social media. Interest rates continue to hover at record lows, national record lows in the threes and fours. And, it's definitely a time for people that have bought their home a year, 2, 3 ago, because interest rates do fluctuate. To look at their mortgage, talk to a mortgage lender, and think about a refinance, because you can lower your payment. And in some instances, maybe you can pay off, higher interest rate debt. There's a lot of different things that you can do, but nonetheless, I think there's no question. The article we saw this week said 20 million owners out there could lower their mortgage payments with a refinance. So there's obviously a lot of people in Tampa Bay that could do the same.
Yeah, it's incredible, the opportunity that is out there right now, and the rates have dropped somewhat unexpectedly over the course of the year. We thought kind of the days of seeing the rates in the threes were gone, and here they are again, and we're seeing a lot of them in the threes and the low fours, and you're exactly right. It gives an opportunity for homeowners out there to take a look at where their mortgage is, and they should be reaching out to a mortgage professional. Of course, we'd be happy to help, but they should reach out to someone who is a professional in the industry to take an analysis and to look at it to see if it does make sense, whether it is just to lower their interest rate and get a lower payment. Maybe they want to look at an additional lower term, so to cut it to a 25 or a 20, 15-year
right.
loan to build equity position even quicker. And a lot of people out there right now are looking, can they get cash out of their home? Can they take cash out to do home improvements, to get the kitchen done that they couldn't do, save for a rainy day, pay off some high interest debt? So there's a lot of items that, a lot of things you can do with a refinance.
And so I think, my brother's actually working with you guys on a refinance now. And I think that one of the things that I think gets missed by a lot of people is not only the low interest rate of mortgages, but the amortization schedule, so that they may be making a car payment for $700, and again, you're not wanting to encourage anyone to go into more debt. That's not the point of it. The point of it is, if you can lower your monthly your monthly payments, you can pay more towards the actual principal to pay it off quicker if your payments are lower and your term is different. So there's a lot of people. Every person's financial situation is going to be a little bit different. But if you've got high debt, if you've got a high car payment, if you've got equity in your house, there could be a possibility of you solving some financial problems, or at least not necessarily solving them, but improving them. I think in addition, though, there are people out there that weren't able to find the home that they wanted. They wanted to buy, or and they couldn't find it. So now they've decided to stay put, and they're going to improve their house. They're going to say, you know what, we were going to buy a house because we wanted a newer, nicer kitchen. We wanted a garage, or we wanted this, that, or the other, and they have nice equity in their home. That could be a situation where they say, okay, let's refinance the house to take that equity and make the improvements and be happy where we are. I think it also goes unnoticed a lot in terms of the cost. I think a lot of people think, I'm going to write some big check out of pocket when they do a refinance. And while that can be the case, and while it makes sense for some people, there's a lot of options out there to do a refinance that doesn't actually require you writing a check.
Absolutely. We don't, on a refinance, we don't require the borrower to come out with any outside closing costs other than for the cost of the appraisal, and that's because that goes to the appraiser. It doesn't even come to us. So we can take the closing costs and we can roll them in and re-amortize them out over, so that they don't have to write a check out of pocket, and they can get what they want. I think you make a good point about the debt, and whether it's a high interest car payment or credit cards and everything else. And a lot of people say, well, I don't want to touch my mortgage and then roll a 7-year car payment into 30 years and everything else. And it's a good point, and it's a valid concern. But really what you got to look at is your total body of debt as a household. So your total household debt, which includes more than just your mortgage. It's your mortgage, your car, credit cards, maybe student loans. And can we trade that debt and give you new debt that's better debt with better terms and be able to pay it off? And lots of times the overall amount of time you're going to pay the debt will go down.
Yeah, I'm an advocate. I think, I've always been a believer, me personally, you know, we don't carry much debt, you know, and that's just, you know, my own personal take on it. Everyone's got their own personal, some people are more about leverage, some people are more about, you know, cash flow. Everyone's different, everyone has different tastes, so I'm not here to tell you, you know, tell you that my taste should be what you do. Everyone,
Sure.
you know, everyone that likes a different, you know, cup of tea. So the thing that I will say though, is that I think everyone out there that's considering this should do a net worth statement. And the net worth statement allows you to get a more clear picture about exactly what we're talking about. You know, so for example, that car payment, the negative equity on the car, the positive equity in the house, because guess what? If you have a car loan, you have negative equity in your car. Your car ain't worth it, you know, unless you put money down, which most people don't. So cars depreciate, you know. So look at your cars, look at your credit cards, look at all that stuff, and then figure out, can you reduce your monthly payment and then use that surplus to pay things off, you know, more quickly.
Absolutely.
You know, and so pay off whatever it is more quickly, or put more money away, grow your net worth with that extra money, putting it in a mutual fund, buying investment real estate, you know, all those types of things I think go unnoticed. People look at it merely from a standpoint of, oh, well, you know, I'm going to incur all these costs to do a refinance, and you'll incur some costs, but not as much as I think most people think. But at the same time, if incurring those costs lowers the interest rate on that debt, allows you to pay off some of that debt more quickly, lower your monthly expenditure, so now you have investable money. You know, it can be a real positive, you know, real positive gain for the right people. I think another, you know, on another point with that is the peace of mind you get by having a little bit of extra money instead of being strapped and maxed out on stuff. I think there's that goes a long way towards your happiness, your sanity. But a net worth statement, really breaking it down and showing what your payments are, and then what you're going to do with that surplus. You know, are you, you know, when you reduce your payments, you know, are you going to use it to, you know, go buy more stuff? That's probably not the greatest idea, you know. But if you're going to use it to grow your, you know, your net worth, if you're going to use it to invest, if you're going to use it to pay off other debts, if you're going to use it for, you know, your kids' college education, you know, I think that's a big one. There's no question there's a lot of problems in our country right now with student loan debt, with kids coming out of college with massive amounts of student loan debt. You know, I think a lot of parents are being a lot more proactive because they don't want to put their kids in that position. So, you know, equity in a house is obviously an option for that too. And you kind of kill two birds with one stone. Again, is it right for everyone? No. You know, are there plenty of people out there that shouldn't refinance? Sure. But there's 20 million, according to this article we read, that are paying more than they would. And I think another thing you have to factor in, and you guys probably do the math on this whenever someone looks at a refinance, is how long is it going to take for them, for the extra costs or the extra debt that they incur to do the refinance, to get that money back from the lower payments.
Of course, yeah.
You know, and how long are they going to be in the house? You know, if you're going to be in the house a year, 6 months, yeah, refinance probably right for you. But if you think you're going to be in the house another 4 or 5 years, most of the time it's the right call.
Yeah, and that's why I think it's important to reach out to a mortgage professional and get a good analysis. Every situation is a little bit different. People have different, you know, personal preferences, like you were mentioning. People have different, you know, time frames they're going to stay in the house, different goals and needs and wants that are out there, and get something tailored to your specific situation. You know, we've heard in the past a lot of people talk about, you know, they have equity saved aside for college and it's sitting in their home. Well, when there's equity in your home because you think your house is worth $300 and you only owe $200, so you have $100,000 of equity, until you actually touch that equity and take it out,
it may go away.
It may go away, and
or
that's
the rate to take it out may drastically go higher.
Absolutely, and so now with low rates, even if you're not, you know, you might be a few years away or several years away, you can take that equity out and you can invest it in a very safe and secure until the time to use it.
It's funny, like I hear people say all the time, like, you know, I lost $100,000 in my stock portfolio this week. Did you sell all the stock? No. Well, you really didn't lose anything.
Right.
You know, all you did is a few numbers on a piece of paper on your account statement change. Until you sell something, until you realize the gain or the loss, it doesn't matter. I mean, I can't say it doesn't matter, but it's not as relevant as people make it seem. Because, you know, look, stocks go up, stocks go down, real estate goes up, real estate goes down. It matters when you're actually selling it, or in this instance, it matters when you're refinancing it, because you may have equity now, but what if you don't later? What if the market shifts? What if all these different types of things could happen? So definitely something that a lot of people need to pay attention to right now. It's a great opportunity for people to do it. One word of advice though: if you're going to sell your home in the near future, don't refinance it. And if you're looking to incur other debt, or if you're in the process of buying a home and then you go to refinance another home, you can run into a lot of problems. So just kind of do one thing at a time. If you're going to sell your house, sell it. The reality is I've seen people have major prepayment obstacles, challenges, when they refinance and then they decide a few months later to sell. Know that you're going to stay put before you refinance, because you're incurring that extra debt. It just doesn't make sense to to do it otherwise. So crosscountrytampa.com if you're looking to refinance your mortgage. You can reach out to our team. We'll certainly give you some advice. We have a lot of people right now, and we just recorded a video that's going to go up on our YouTube channel about whether you should sell or refinance, because there's people out there that are kind of in that boat. Should I refinance and stay put and make some improvements, or should I sell and go buy another house? And so that's always a concern. So we'll have that video up that kind of tags off of this same topic that we've been talking about. We'll have that video up here shortly as well on our YouTube channel. Our YouTube channel's at The Duncan Duo. That's all of our socials. You can follow us anytime at The Duncan Duo on all of our